This is Bazaar Morning Call. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, which means it's the day before, one before we kind of wrap up the week. It's a truncated week. Remember, markets, though, are souring us a little bit on sentiment. That's the cue from overnight, and we're going to kick off with that kind of sentiment this morning. This is, of course, we're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. Well, the market sentiment may be souring, but our sentiment is upbeat, right? Because we're getting into a long weekend, just one more day to go. 2 more days, actually, today and tomorrow. But the sentiment in the NBFC space could be souring because of what happened with the RBI ban on gold financing for IIFL. Day before yesterday, and then yesterday we got some negative news on GM Financial. So that could be a space which could be tricky. But other than that, not bad.
Not bad. Gold hitting fresh all-time highs overnight. The Bitcoin as well made those all-time highs, but then corrected 8%. So fair bit of volatility as well picking up in select asset classes.
No, absolutely. And I think yesterday what drove it was data once again, and weaker data for one. So we'll kind of shed the spotlight on exactly that. You basically had broader markets which lost a little bit of momentum. And we've been highlighting this over the last couple of days that the Nifty is not doing very much. It's quiet, sideways, undecided. I mean, for example, the Nifty for the second straight session had a doji candlestick pattern, which basically indicates that market participants are undecided as far as the direction is concerned. More on that later. But broader markets lost momentum. The small cap index, after losing 0.5% the day before, was down 1% yesterday. And that's essentially the real story because, and I've kind of made this analogy that it's like, the air going out of a sort of a football or basketball slowly, very, very slowly. You don't realize it because it's not a big boom and doesn't make any sound, but it's happening. Many stocks, liquid, well-owned stocks in the smaller universe are down 10, 15, if not more, if you look at the NSE 500 group of companies. Now, look at the sentiment from the sort of overnight U.S. trade. So down. I mean, you have U.S. equities, which were lower, 1% on the S&P. NASDAQ was down even more, 1.65%. What was the trigger? The trigger, simply put, was the fact that the ISM services data point came through, and within that, the employment index fell below 50. I mean, 50, of course, is the differentiator between expansion and contraction, and we are now under 50 on the employment index. Now, if there's one thing which the Fed is very focused on, it is, of course, labor market and the strength in the labor market. They've been trying to cool things, and it looks like you got the first indication that maybe things are cooling. And markets paid special attention because this is services, and services inflation is sticky, rents, etc. And here there is weakness on the labor side which has come through. And this also suggests that when we get the full monthly jobs report on this Friday, of course, markets here will be shut and we'll react to it on Monday morning. It suggests downside risk for that one as well. So that is basically the data which caused a bit of weakness. Now, the 10-year was down about, 6 basis points. We're at about 4.15%. Dollar index held just under 104 levels. And gold hit a fresh high amid this entire risk-off kind of environment that we had. Nothing large, but I mean, there was, of course, 1.6 is not small either on the NASDAQ. You had oil prices, which are also now hovering around 82. They fell another 1% overnight. Now, let's just sort of circle all of this back to the levels here. You got to look at the supports more than look at where the market can head on the upside. That's the signal, that's the indication that we've been getting. So for the Nifty, the first support is the hourly average. We didn't quite hit that. We kind of stopped short by about 30, 40 points off that level, but that's the 40 hourly exponential average, which is 22,253. We left off about 100 points away from where we are. That's the first support which comes in. And then, of course, a little lower than that, you've got the 20-day moving average, which comes in at 22,059. Upside, of course, I mean, whenever that materializes, it remains the same. Those are extension levels, 22,538. Bank Nifty will find resistance at around the 48,000 level. 48,002 odd is basically the resistance line for the Nifty Bank. Supports for the Nifty Bank come in at the 40-day and the 20-day. Both, by the way, are now just, 20, 30 points within each other. So I've kind of rounded that off to 46,450. That's the broad support which the Nifty Bank needs to hold. If that goes, you're basically looking at more downside levels starting to open up. Remember, this is the first time that the US market is looking like there is some semblance of a pullback. It's just 1 or 2 days. right? But the US has had absolutely no falls along the way, even as we have had very short-lived 3.5%, 4% kind of falls like the one that we had in January. So be focused on downsides and, of course, protecting that rather than looking at what the market can do, at least in the very near term on the upside. The GIFT Nifty implied open is about 16 points lower. Sonia.
Oh, absolutely. And, give and take everything. I mean, the Nifty is consolidating around the 22,300 mark, right? It's been a stellar run that this market has seen in the last 1.5 months. And the net flows have been very, very strong that have come through. So, in a sense, the Nifty is largely just consolidating around the 22,300 mark. The US market sold off overnight, so there you have it. It was a 400-point fall in the Dow. But I think the US futures at this point in time are trading in the green. So just keep an eye out on that. Brent crude is below $82 a barrel, so that always works for us. But both foreign and domestic investors have bought in the cash market. So as I said, the net flows have been positive. The FI has bought about 570 crores. The DIIs, the money has really been coming in thick and fast from the domestic investor community. 5,000 crores total in March so far, 1,800 crores in one trading session. But I think the NBFC space could continue to be in focus after what happened yesterday. Remember, IIFL Finance saw the RBI banning its gold loan portfolio, and now the RBI has barred JM Financial from financing against shares and debentures. So this entire space could be under pressure. JM Financial was down about 2% yesterday, and there could be a sentiment overhang on this entire piece. So all in all, the strategy for the day could be perhaps to just wait and watch. Given that it is, a bit of consolidation, the implied opening is suggesting a fall of almost about 20 odd points. So minor negative bias, but the buy on dips is something that has been a good strategy for the last many weeks and months. Maybe that can continue, but little bit of consolidation wouldn't harm anyone.
Well, so not just one thing on the RBI's action, right? They have been one of the best in terms of actions that we have seen in the last few years. So they have spotted something. I guess they're trying to fix it before things go out of place. So that's my limited view with regard to the RBI action. But let's focus on the markets. Well, the Nifty's uptrend, it appears to pretty much intact till the 20,000 odd level is held out. We saw some pain in the broader markets, and I think that is likely to continue. And the Nifty Bank, the sense I get is it's outperforming the Nifty a little bit, and it's bracing for a bigger move. And I'll tell you why in just a bit. So that's about the top indices out there. What did the FIs do in yesterday's trading session? Well, they added some short positions, and that's why the net short positions increased by close to around 15,000 contracts, because they added shorts and they covered some longs as well. In terms of percentages, well, 35% of the position is on the long side, 65% is on the short side. But the Nifty Bank, the reason I say it's getting ready for a bigger move is from the start of the series till now, the number of shares, the open interest has nearly doubled. That's telling you in 4 sessions when the open interest goes up in this manner, I'm looking at all the contracts and there's build up even in April as well as May. That's telling me that the Nifty Bank will make a big move in either which direction. And as of now, it appears that maybe in fact it is leaning towards the positive side. Let's see if that plays out, because that's been a relative underperformer in terms of, staying away from its all-time highs. What are the levels you're looking at? If you're looking at a big move, then I'm looking at, 1,000 points on either which way. 20 DMA is coming in 1,000 points lower, while the recent high, the fresh all-time high, is around 1,000 points higher. What about the Nifty? I'll say the uptrend is intact. As long as it's holding on to this 21,850 to around 22,000 mark, the Nifty up move is intact, but I'll be a little bit worried about the broader markets as well. Now, the RBI is cracking the whip, right, on various financial institutions. So I'm looking at some of these PSU banks, and the one that comes on my radar is Canara Bank. Yesterday as well in the market, looking a little bit wobbly, the stock went ahead and made a fresh all-time high. Even after this big move that we're seeing, it still trades at around 1.1, 1.2 times, depending on what book value you're looking at on a forward basis. And gold accounts for around 14 to 15% of its total loan book. So there's going to be a bit of a vacuum that's created out there. Then maybe this could be one of the beneficiaries. Delivery-based buying was there yesterday, and it was quite higher in comparison to what we have seen on a 10-day average. So much higher in comparison to what we have seen out there. The 20 DMA is a reference point on the downside. That's around 30 rupees away from current levels. It appears something's going for Canara Bank, so I'll keep an eye out on this stock. But for the markets on the whole, the Nifty's uptrend is intact. Some more pain in the broader markets. Keep an eye out on the Nifty Bank. It's bracing for a bigger move.
All right, thanks a lot for that. So the Nifty Bank could be bracing for a bigger move. But let's get you some opinion now. On the equities front, Amit Sachdeva of HSBC believes that India is well positioned for another good year and short-term consolidation, and is likely to create appealing buying opportunities even as valuation premium relative to the region and the market's own history makes investors somewhat cautious. He says sectors favorably placed are autos, healthcare and energy, and they also like retailers, real estate, industrials and telecom. He says risk-on plays include IT services, banks and chemicals, and sectors unfavorably placed are FMCG, utilities and metals. Amit presents their 12 buy ideas: HDFC Bank, Shriram Finance, Asian Paints, Avenue Supermarts, BPCL, Maruti, Bajaj Auto, Embassy, Glenmark Pharma, Apollo Hospitals, Voltas and RR Kabel.
Okay, Kunal Sudani weighs in on the money market. He's, of course, with Shinhan Bank. He says softer than expected. U.S. macroeconomic data and easing yields weighed in U.S. dollar, but overall dollar index is stuck between 100 and 200 DMA before Powell's speech on a series of jobs data from the U.S. this week. He says Eurozone's strong services and composite PMI readings suggest a slow yet positive economic recovery despite ongoing risks. For the currency, he says 82.8 acts as a support, while 83 to the dollar is a resistance.
Okay, and on the bonds today, Neeraj Gambhir of Axis Bank says that the 10-year benchmark bond yield traded in a narrow range of 7.05 to 7.08% during the week. He says yields hardened during the week after India GDP data exceeded expectations. He adds lower than expected US ISM manufacturing data led to lower US yields and consecutively a fall in domestic yields. He also says that Bloomberg announced India fully accessible route bonds inclusion in the Bloomberg EM Local Government Index. He expects the 10-year benchmark bond yield to trade in a range of 7 to 7.1% this week before the CPI data that's due next week.
Okay, let's run you through all the top stocks that we're tracking for you. We get to our special top 10 segment in just a bit. For the time being, we run you through the list. We're looking at Zomato, Samvardhana Motherson, Havells, Aditya Birla Fashion and Retail, MGL, Torrent Pharma and JSW Energy. All of them will be reacting to positive news flow. On the flip side, you have JM Financial, Suvin Pharma and GR Infra that will be reacting to negative news flow.
All right, so that's basically the list of stocks which is coming up now.